Welcome to the Market Alert for Thursday, 16th of November 2017. So yesterday the pound reacting to the average earnings and claimant account. You can see there earnings increasing slightly, so the market turning slightly negative there. And then for the rest of the session the market just traded sideways and continues to do so. And in the daily chart you can see exactly why. We've got this range-bound market that continues to trade this way. Got a bit of a spike out of the sideways range the other day, you can see there, and yesterday. So we've got a new sort of range at the moment, so let's just add this one in off there and we'll delete that one. But you can see the market still in a sideways range there at the moment. And news-wise for today, what have we got to move the markets? We've got retail sales. These are going to be out at 9:30, and then we've got final CPI for the Eurozone. So that's after adjustments and everything else. Unemployment claims from the US, 113 import prices, and then there's more. We go to Philly Fed. There's again big news week this week. Carney speaks. I don't know why he's been downgraded to a medium impact here. That's at 2 p.m. before the Dow opens. Very strange there. I don't know why. Perhaps he's not going to say anything, which is would be useful. And we've then got gosh, we got wheeling them out, aren't they, this week? We've got Kaplan, we'll have an arrow for Kaplan then, and Brainard are going to speak as well at 6, 10 and 8:45, so enough to bring the market back to the upside as far as the Dow is concerned. And speaking of the Dow, yesterday very quiet. We had the initial drop to the downside. I'm going to do something for you here. I'm going to start adding a few other things in on these charts so that you can actually get an idea of what's going on. We'll start off with the test bars, if I can find them. That's because they're under this one here. Just so you can see what they do at these levels. You can see there's a lot of volume, but let me highlight and show you exactly what's going on. So I'm just going to highlight all of these and click apply. And I'm going to explain what's actually going on here so you can get an idea of being able to read this when you see this happening live. So what we've got here, the red bars show the selling coming into the market, and you can see this with the volume above the average line here. It's in red too. And then we've got this purple bar here, which is what I call a pogo stick. The market opens, comes down, and then closes just off the lows. Notice the area where this is actually happening. It's down at a major support area. They don't want the market down, and you can see them doing exactly what we've spoken of before, where we've got either the plunge protection team coming in, selling the VIX, or buying the Dow. And there you'll see again we have another attempt at trying to break this level, which is the 23,250 level. And then they buy it back again with another green bar. So the green bars show them buying the market back, and then all of a sudden everything's free to move higher, and then the market can move back to the upside, having absorbed all of the selling in this area, and the market's free to move higher. They run the market up with several thousands of S&P futures contracts or mini Dow contracts, and then take the profits, which you can see there. As the market bounces, no buyers come into the market, and you see that as the drop off in volume, and then we get the selling coming back into the market again, and then we see them buying back the market just at the entry price of this this trade here. I'm just going to mark this up for you. You'll see it's just at the entry price here, and you'll see there increase in volume, do their damnedest and then bring the market back. Goes up on low volume, but as they approach the resistance area there, they drive the market through with the buying, and then there's a bit of selling that comes into the market and indecision in the telegraph pole bar, and then we get the selling coming in, and that's enough from this level up to here to then take profits before the end of the session. And not content with that, you'll see them saying we can't have this finishing on the low, so we get this buying pressure coming in, and buying pressure simply shows you that there's more buying than selling because the range of this bar is narrower than this one. And then the market, you'll see a reverse there, either that or short covering, market comes back in. Then all of a sudden the market's met by what's called selling pressure. So we've had the buying pressure here on the downside, volume's greater, the range is narrower from the high to the low than the previous bars high and low, and then you get the opposite in an up move, and you can see how the bailed out at this level, again massive greater volume, and we've got a resistance area as well, and then down comes the market, and once again you see them buying back in at this level with the pogo stick and a retest, and then on the overnight market, the market's been free to move back to the upside. And if you want more videos on this with more detail, then let me know, because you can read the markets like this. You can also take other trading opportunities and spot them a mile off. In particular down here, even though we had the buy signals, we can see here immediately that what we've got here is a cluster of institutional buying at this area. And you may not know this, or you may, that you can actually mark up trades outside of the circles as well, or the indicators on the chart there. So do let me know on that one. And then in the bigger picture we have exactly the same thing as well. You can see yesterday that we had some selling, but they've managed to bring the market back on the overnight, and we've just seen that in a smaller time frame. And again, that's the great thing about looking at what the professionals are doing and looking at the volume, is that you can go from one time frame like the daily chart back into the 5-minute chart and see exactly where they were buying this market back, which we just looked at, which was in this area here. You can see it, and then of course the markets move back to the upside. Now it needs to get back above the 20 bar average, and I'm going to adjust this 76% retracement, and I'll talk about that as well in another video, and I'll show you, in fact I'll go back and show you that in a minute, why the market didn't go down on that sell signal as well. So we've got a new 76% retracement in on the daily chart as well, and we've got to take out that 20 bar average, as I just said as well, in order to move higher. So we've had a bit of weakness in this market. It's the first time we've broken the 20 bar average for a very long time. As I said, going back to September the 11th is when the market broke to the upside, and that's the way it's remained. Still looking bullish. They still want the market on the highs. Let me just show you this before we conclude, and I will do other videos in more depth. But if we come back to this trade yesterday, let's just mark it up. We had a sell signal in the evening, and as I sat and watched this, you could see the volume building. You think this isn't going to go down. They're doing their best to bring this market back to the upside before the close. And this entry price here, let me just drag this across a bit so you can actually see it. If you come up to markup and you come down to the low to the high and draw across, I'll do that again. Let me get rid of the extension bit there, and let me just change. We've only got one in there, haven't we? So we've got 62 and 76. Let me click on apply. Take that out of there, close that. That's the actual low to the high, and then just drag this across, and you'll see why the market failed to move lower there. So there's again, when you start seeing the patterns, you'll see why the market stops in certain areas as well. And also on this, you can take individual bars as well. and just draw them in, and you'll see why the market stopped here as well. So again, very useful tool. You see why the market struggled and then moved lower. Not really a tutorial on this, but just to give you an overview that there are set patterns in the market that it adheres to and actually follows. And I will do some more videos on this, so you can overlay these other tricks of the trade, and again, combined with the volume, you'll be able to see how you can spot trades and how the market's going to turn and where it's going to turn with some considerable accuracy and ease. Right, quick look at the implied volatility. I've waffled on long enough this morning. Let's have a look at that before we conclude. So yesterday we see the implied volatility shoot back up from 931 to 1096, just under 11. This is the highest it's been since August, when we had a 1096 back then as well. Why did the market or the implied volatility turn around from 931 to 1096? That was because of the weakness we saw at the open. We saw the market being bought back. There was a fight and a struggle to do so, and for that reason we've seen an increase in the implied volatility, because had it have broken the 23,250 level, no doubt the market would have moved lower. However, when we look at the implied volatility in zoomed in like this, it can look as if there's an awful lot going on. But if we move out to a 2-year chart, let me just move this down a bit, or move this up a bit so you can see it. You will see that we're nowhere near any of these other major moves that we've got in the market as far as the implied is concerned. So what we're doing is coming off the lows here, and if you look at this 10 years ago plus, you'll see how low the volatility really is. It's not moving at all. So even in the shorter term, as with all short terms, what can look like major moves taking effect, they're not necessarily the case at all. So there's a long way to go on the implied volatility if the market does break to the downside. So again, still fairly much in the lows there. We've just got used to seeing lows in the implied volatility, and sometimes that can taint the judgment of what you're actually seeing. Sometimes you have to step back and see the bigger picture, which is why we look at the daily charts if you're trading on an intraday basis as well, so you don't lose sight of where you are in the bigger picture. Right, that'll do it for this one, and as ever, thanks for watching. See you in the next one.